Good morning, everyone. Welcome back to the Schwab YouTube coaching channel for our Wednesday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from a beautiful and sunny Denver, Colorado today. As usual, pleased to be joined by my friend and fellow Schwab coach, Brent Morris. Good morning, Brent. How you doing this fine Wednesday?
Hey, things are good in the Salt Lake area, beautiful out, and I am glad to be on Trader Talk today. Interesting market today, Kevin. It's been, well, we'll talk about it, but
We will.
it's a mover, and those are always interesting.
It's always nice when we get to change the topic a little bit. It's
Yeah.
been solid 4 or 5 weeks of discussion of drawdowns in the market, risks associated with it. That's not likely to change, of course, but due to some overnight and late yesterday news, we do have a rally to start things off. So we're going to look at some important levels for all traders, of course, as we try to ascertain whether this rally has any legs or not. So before we get to it, let me remind you of a few key details. Number one, we're joined by Barb Armstrong in the chat. Please say hey to Barb, a fellow coach as well. Fantastic at her role. She'll be able to get to comments and questions that Brent and I are unable to, but we want to hear from you. We'll keep an eye on things in there. Please don't hesitate to drop comments and questions into the chat for the duration of our show. We're going to go about 45 minutes in total. You can also follow the three of us on X, Barb Armstrong CS, Brent Moores CS, and Kevin Horner CS on X, the best place to find us coaches when we are not hosting classes for you here on the channel. Last note, make sure you subscribe to what we offer you. Remember, we're here live every day from market open until about 4:45 p.m. Eastern each day. So lots of live content, the majority of which is archived for you and ready to go shortly after our class completion. So if you make sure you're subscribed here. Great way to stay abreast with what we are up to for you every single day. Now, with that, we're going to jump to the disclosures and then we'll get to the chart. So please remember that everything we discuss today should be considered informational and educational only. We make no recommendations here. We will utilize technical analysis to discuss the areas of the market to ascertain levels of price action we need to pay close attention to, of course. We will also, as we go forward here, utilize those concepts and strategies and share those things that traders might utilize on their own. But again, think of technical analysis as just one of your decision-making puzzle pieces, not the entirety of those decisions to be made. Now, if you are new here, our process has us working through a top-down review of the market. That means we start with our broadest of indices. We'll look at the S&P 500, the NASDAQ 100, the Russell 2000. We're likely to expand into some industry groups, semiconductors, maybe transports. You got a lot of stuff going in the market right now, obviously. So we'll work our way down into sectors. And then if time permits, we'll get to some stocks in the news. So with that, let's jump right to it. Brent, I'm going to start us off with the S&P right at the 50-day moving average. Brent, we have not seen a gap up in a while. It's really a big one though today, isn't it? My goodness.
A big gap up. We'll see, where it starts doesn't mean it's going to continue that momentum throughout the day, but we'll take a 2.5% open up to that 50-day moving average. So just for everybody's clarity here, that purple line is a 50-day moving average. The blue line is a 200-day, the orange a 20-day. But look, I mean, a lot of people were probably concerned. We had a 2200 crossover not long ago, which is generally not considered to be a bullish sign. But this is a news-driven market, and this, for anybody who has not hasn't been paying attention on that and didn't see the news, there's a 2-week ceasefire, and supposedly oil should be moving through the Strait of Hormuz again. And well, this is translating to 2.5% opening higher, just above that 50-day moving average.
It's a nice start, and yet, Brent, we are going to see many a trader talking about whether this has legs, and
Yes.
the area to which we have rallied could be just considered resistance, couldn't it?
That absolutely could be an area of resistance. And similarly, today's open, which is the bottom of today's candle, is that going to be a support level? Can we hold that throughout the day? I think we're going to have to look at an intraday chart, and it may, even if you're not a day trader or anything like that, and you're just curious about the markets, it will be interesting to look intraday on this, and where can we keep up the momentum? Because right now, hey, it's a nice green candle. Admittedly, we're a few minutes into the market,
Mhm.
but is it going to stay that way, or are people going to profit take and go, oh,
Mm.
finally, I can get out of a particular trade. This may not last. This is just euphoria. This is just, upward momentum that's not going to last. And they start to sell off, and then the market goes down. So, where it opens doesn't mean that's where it's going to go. But hey, I'll take it, Kevin. It's a nice jump up. And but just a reminder, this, we can do technical analysis, but if there's say the ceasefire breaks down,
Mhm.
what's going to happen in the market? Well, I can't say for sure what's going to happen in the market, but I have a pretty good inclination that if the ceasefire breaks down, we're going to see a pretty good drop in the market too.
That's exactly right. Don't we can't look at this immediate news as the only thing that matters now. And of course, we are apt to see more headlines. We certainly have more headline risk. That's not going to likely go away. So we need to pay close attention. And as traders, remember there are going to be individuals who've been expecting the opposite of what occurred overnight tonight, and those traders are going to be likely covering situation, covering balances, covering shorts, replanning or setting up new plans, new strategies, Brent. So, every move can happen, but remember that the levels to which we rally and maybe lose steam or momentum also matter. And so, Brent, I thought we could look at this on like an hourly bar just to give us the clarity of something to monitor on an intraday basis. This hour-long chart covering the last 90 days might be a good way to keep an eye on it, Brent, because that white line I drew in, you can see this was support. And remember, regardless of your time frame, everyone, what once was support can then become resistance. And we are basically right back to that level. So what we need to see is, can we establish a lane of price action above this 6,800 level? And Brent, we'd be remiss if we didn't just point out how clean 6,800 is. That is a nice round figure, and especially as it relates to the broader indices, it would seem those round figures carry weight for a lot of traders.
Yeah, I mean, when we come up with support levels or resistance levels, there are different ways we do so. Very often we'll look at horizontal levels, price levels, where a stock or index has bounced off that multiple times in the past. That's where the white line was generated. Sometimes it's a moving average or a diagonal line. It can be a Fibonacci level. It can
Mhm.
also be, hey, these kind of nice round numbers. And when they converge, and when you get that nice round number, so to speak, that corresponds to another level that maybe lends a little bit of credibility to the resistance or the support level. If we're below it, it's resistance. If we're above it, it's support. We'll see. And so if we break above that old resistance, maybe it becomes a support level, and it can actually turn from something that's maybe working against us a little bit if we're a bull, to something where that's actually working for us a little bit if we're on the other side of it.
Yep, exactly. And I think the reminder, as usual, Brent, is that we don't really look at technical analysis as telling us what's coming next, but it does let us know where we can set risk. And so traders who were bearish probably can, I mean, to a certain extent, Brent, if you were bearish and you hadn't established bearish positions, this kind of a rally can give you the level against which to base bearish viewpoints, right? Because some traders might look at this and say, hey, if we traded through the white line to the upside, I can no longer be bearish in my time frame. That would let them know that maybe they should just move on from that trade in that window. But conversely, the bull would feel emboldened by a move through the white line with any volume or conviction.
And what you just described, Kevin, is a method of an example of traders using these kind of objective signals
Hmm.
to make trading decisions. And that's kind of the good thing about having that. It doesn't mean that the stock's necessarily going to continue up or go down or whatever necessarily, but what it does give you clear on and off ramps, so to
Hmm.
speak, and that brings more of a I don't know the right word other than just objective, of of a a way to follow and to do it in a systematic manner so that you're not as subject to, just the whims of your emotions, which is what we try to minimize here on this.
That is the truth. As
Yeah.
you said it, the whims of our emotions. Let's further that discussion here. So I wanted to utilize some of the questions in the chat just to highlight some of this. So first of all, how often do gaps fill? Rita's questioning. Not every gap fills everyone. However, if we trade through levels, then we have greater potential to fill those gaps. So the low of the open basically becomes a level, Brent, where some traders on the long side would choose to set risk in the short run. So there's an idea for you. Trading under the gap ledge here could mean a little bit of selling. If we looked at former resistance in here, does that mean if we sold down, could we come all the way back to this zone here, equal to the 200-hour moving average? I think a lot of traders would say yes, but it would take a momentum-based move under the low of the morning, basically under the open, where that opportunity would increase its likelihood.
Yeah, there's an approach or a theory in the market. It doesn't always hold that gaps. First of all, people say, well, gaps fill, and then people go, well, no, a lot of times gaps fill, and then they say, well, when the gap starts to fill, then it's going to continue to
Hmm.
fill. Well, that doesn't always happen, but going with that premise of, hey, if it doesn't start to fill, it's less likely to fill. But once it starts to fill, then it's more likely to fill. That's
Hmm.
why that support level, that short little line you drew there, just kind of delineating the open of today, that's where that kind of becomes impactful. But there's just no universals here in the market on terms of that.
Entirely true. Not universal, and nothing, again, the reminder as it relates to technicals, nothing happens 100% of the time. What we work with technical analysis are probabilities, never certainties. So hopefully, that's what we're looking at here is just an understanding of some important levels we can consider working with, and that'll help us out. Now, the level today, the fact that we gapped R3 on the pivot point is very instructive for short-term bulls. And I think we're going to see something like that with the NASDAQ too here, Brent. And so traders monitoring the pivot points are certainly going to be monitoring that R3 level, being that we gapped it. Now, the reason I say that, everyone, is that if you're a user of the pivot points, remember what they provide us with. They're giving you the estimation of today's price action levels around which the majority of trading is likely to occur. Now, that purple line where my cursor resides right here, that's what the pivot point was based on yesterday's price action. When we get a gap like this, a lot of traders believe that the level that we gap to, in this case R3, now becomes the pivot point for the day. And so what we are looking to, can we hold that level as we are getting the fluctuations in the first 15 minutes of the market here? And so ultimately, it starts bullish. Doesn't mean it has to hold, but it gives us some things to look towards here. Brent, this was a significant move in the NDX, wasn't it?
Well, when you're above that R3 level,
Yeah.
it's what we're up almost about 3% here today. So you get a very different perspective depending on what time frame you're using. We have a
Hmm.
15-minute chart here. So each of these candles represents 15 minutes worth of time. And but if you look at a 1-minute candle, it's going to look different than a daily candle. And nice big gap up. Probably not surprising that we have a gap up in the Nasdaq a little
Yep.
bit more so than, say, the S&P 500. I mean, they're both, nothing wrong with the S&P 500 move, but generally when you get big moves, the Nasdaq tends to move more, not always, but it tends to move more in the same direction as the S&P 500.
Hmm.
Well, in this case, that's what we saw, but we are seeing that little sell-off. Here's a 5-minute chart. You can see gap up and 3 red candles here at this point. We're still holding that R3 level, but we'll see.
We will. But Nonetheless, what are we seeing intra-period here? In that 5 minute bar, we're seeing bouncing. So you've got bulls trying to defend that ledge there. Wouldn't be surprised if it holds. If it doesn't maintain over the next five, say 2 to 3 5 minute bars, well, then you're likely to see a little bit more selling in that way. So we'll see how this goes. Let's look at it on the daily chart, Brent. There you go. A bit more of a clean gap on the 50-day, whereas the S&P was kind of through it, but kind of near it. The Nasdaq here has really popped higher. Let's put that. I'm going to duplicate, and no, I'm going to activate that line instead, and I'm going to put it to the levels that we have previously rallied to right here. And I'm going to extend that line because I think that a lot of traders are going to look at this because, as a heads up, everybody, if we traded through the white line there, that gives us new short-term highs, Brent, and we could then possibly consider the long-range bull trend back on play.
Yeah, because right now you can't overreact. I mean, I guess this is maybe the theme of the show here so far. You can't overreact to a one-day move. Now,
Right.
it's admittedly it has been a little bit more than a one-day move. This is the most significant. This is a nice gap, but you can see the rally we had the week preceding that. But the point is, anytime when you're trending up or trending down, you're going to have little reversals along the way. And one of the nice things is the rally we had up until today brought us back up to the 20-day moving average, which at that point you're going, well, we've seen that before. It's likely to bounce down. Well, this changes the narrative a little bit, but it's not something where you'd say we're in an uptrend unless you go really short-term graph here. Most traders want to say we're in an uptrend at this point. The question
Mhm.
is this, can we break the downtrend? And I think that's a key level here that you just highlighted there. If we start to break above previous highs, that is a very, most technical traders would say breaking previous highs is a very significant uh, event here in terms of our technical analysis and in terms of the trend.
I think so as well. Now, obviously, as we've stated, there is no guarantee that today's move holds, that it extends beyond even the first opening levels. The other thing that we can monitor for those of you who believe that the trend is more likely to continue than now to the upside, one other consideration is the downtrend line having been broken. And we often talk about that in this class, the break of the downtrend line in standard pullbacks. And I say standard because the return here from peak to trough on the NASDAQ 100 was down 12%, which is what we would call corrective in nature, but not a bear market by any stretch. And Brent, when you get that kind of a sell down, then commonly you take out the downtrend line. Some traders get started on a new position based on the break of the downtrend line, just to see if that line maintains and if that holds. So there may be something underway here that could be a longer trend development. But as always, we have to trade individually to our comfort with risk, and that's the key takeaway. Now, Brent, I want to throw one note to you here, one question to you, because there was a comment in the chat about the tendency, essentially about the tendency that we traders have to take good news in the moment and ignore the rest of what's been going on, suggesting perhaps that not everything is as rosy as today's open does offer us. But I tend to agree with that assessment, Brent. I mean, we know that there are other risks involved, and it's not as though the news from yesterday afternoon is telling us there's no more conflict in Iran. It's simply a 2 week kick the can down the road or another new window to pay attention to, isn't it? So there's plenty of additional risk here, but the market and risks are, and the economy, these are not all the same thing.
Correct. And we can see this with like the VIX when we consider the VIX as kind of a measure of risk. Yes, we've had a big drop in the VIX here today. What are
Mm-hmm.
we down to? We're down to 20
Oh,
on the
right about
VIX.
20.
But look, in the grand scheme of things, 20 is still what most traders would consider elevated. To your point, it is kind of a kick the can down the road. So the question is this going to sustain itself? Because this is a news driven market right now. I mean, the market's always news driven to a certain extent, but more so than ever, this market is really driven out of news out of the Gulf region.
Mm-hmm.
So what further developments are just going to, you would think, impact this significantly. And if we don't, if the two, the two over the next 2 weeks, we don't see improvement or resolutions, it seems unlikely that the trend is going to continue. But if there's some resolution made, maybe it will. I don't know, but this is just going to be news driven, and there's still a lot of risk in the market. Just simply out of the world oil and military situation, simply because of that, even with the relief in the VIX, we're still at 20. So that
Hmm.
does kind of, there's still concerns with inflation. How, the oil price thing, even though oils have gone down, is going to, if is isn't good for inflation right now. There's always concerns with that. There's other economic concerns that can affect the market. And we'll see. We have earnings season coming up next
We
week,
do.
which we'll get a glimpse at corporate earnings, which can move things. All these together can impact what the market is doing. Now, let me mention one more thing. There was a concern kind of before any of this whole military situation broke out about market valuations. Well, one positive, I guess, way to look at the pullback is some of the valuations have lowered. So the forward PE on the S&P 500 is now about 19 and a half.
Wow.
It's significantly below where it was in October. October's
Hmm.
high forward PE was 23. And so from that standpoint, the market has deflated a little bit because people were kind of worried about it being a little bit excessively, frothy, so to speak, I guess. And maybe we've deflated that a little bit. Maybe that's one positive thing that's happened with the sell-off.
That we'll take whatever positive we can get, Brent. We're going to
Yeah.
snag onto it, right? We're going to grab hold and keep it for as long as we possibly can. Let's see if the market reacts the way that we need it to validate those ideas. I wanted to bring Brent back one chart that we've been using frequently here, everyone. It's the look at the futures. Now I'm using the future symbols here, so this is not a recommendation for futures or futures trading. What it is it's offering us the visual of the futures on the S&P 500. That's the left grid or left chart. In the middle chart, we have the VIX in futures. And then on the right chart, we have the oil futures. And as you can see, we had a huge move in oil with the late afternoon notifications. We sold down 22% on oil, of course, and that made it a clear pop to the futures on the S&P, and of course we saw a pretty healthy move lower in the VIX. But this is a pretty interesting view of things. It's been a good way to keep an eye on the risk on, risk off nature of the S&P and the broader indices here. So I just wanted to take a quick peek because clearly the move in oil has benefited the broader indices, the S&P 500 most notably. So Brent, let's get to the Russell 2000, which is up real nicely today, 3.75 or 3.33%. We've also got the yields dropping. We're going to look at that chart momentarily. But again, Brent, we may have at least achieved a level today that some traders might look at and say, well, I can set risk. Maybe they look at the 50-day as the level they'll do that with.
Yeah, I mean that's a that's a significant move. And of all these companies out there, the ones that stand to lose the most, I guess in a sense, are the ones that are in the most precarious economic situation.
Hmm.
And that's a higher percentage of small caps, which is what we're looking at, versus large caps. And so any easing of that risk tends to bring a little bit more relief to those small caps, particularly if yields are dropping. Um, and that's what we're seeing manifest on the chart. Nice break
Hmm.
of our trend, nice candle. Not only do we have the gap up, but we're kind of near the high of the day on that Russell chart, which is a very nice thing. And
Yeah.
so that's a little different than looking at the NASDAQ chart right now, for example. Even though the NASDAQ chart's moving a lot, we're not near the high of the day after the gap up. And we're up over 3% right now.
Yes, and a big reason can be if we look at obviously the overnight news, but broader, you're seeing the pressure that the 10-year yield had been kind of putting in the face of small caps. This is a nice gap below that 4.3 level that's helping out, as is Brent, the move in the US dollar. The dollar got beaten back here this morning as well. And again, this will help our multinationals, but also benefits the broader indices holistically as well.
Yeah, no doubt. Just to answer a question, how do I get my pivot points to look like Kevin's? Make sure
Ah,
you're using an intraday chart here. But Kevin, maybe you could show.
yeah, I
Show
can.
me that.
Let's. I just kicked it over to the semis. The reason one thing you might not know about with regard to the pivot points, everybody, when you click on this, open up your gear. Two things. Number one, the default to time frame, or excuse me, to show only today is no, which means you're going to see a ton of those lines at varied levels. So change this to show only today. And then number two is, and I can't explain why, but on auto, I get the dots for my line instead. And what I tell it to do is to make each line a numerical value. And it seems that that gives me the solid lines for each of my pivot levels. Make sure you go through and define your levels by clicking on the R3, R2, R1, and don't forget to include show plot. I think R3 and S3 by default are not highlighted to show the plots. So just a heads up on that with regard to the pivot points. And if you're in the habit of customizing those details, don't forget, if you'd like what you've customized, you can just click Save as Default, and then the next time you load it in any instance, it's going to be with your criteria, the way that you've built it.
Yeah.
Okay, Brent, let's talk about those semis because what a fantastic pop today. Brent, that is a new, did we just trade to a new high in the semiconductors? We sure did. 5.5% up on today's open.
5.5% is a big move in case you didn't know. So we'll see. But that, I mean, semis are cooking right now, and we'll see if we can hold that high because that's kind of a significant level on that. And you can see how quickly that RSI has moved up as well. But that's we'll just have to look in throughout the rest of the day. After you get this big a move, whether it's to the upside or the downside, often you do get kind of some profit taking or a breather or a relief rally, so to speak, if it's on the downside. So wouldn't shock me if we pulled back a little bit after a 5.5% move up, but we'll take it, man. That's great.
It is. As always, I'll encourage traders to remind yourself of why you're in a position at any given point. Remember that if your view was, hey, I'm going to trade this for the overnight possibility of a pop, then this is an area where some traders would take some off. Is it a new high intraday? Yes, but intraday highs don't have to be held at close. And a lot of traders look to validate levels achieved by closing values rather than intraday price levels. So if you were targeting the prior highs, well, you've got the move you were looking for. Trade to the plan you set for yourself as best you can. Try not to allow that enthusiasm at the open in the first 30 minutes of trading to override your plan for your trade. Doing so, allowing that to be overridden like that is probably emotions leading to your decision making. And we try as best we can to eliminate or reduce the emotional tie to our trades. That's what makes hasty decisions, unfortunately. So we'll see. Good question. I don't know if this is a gap that's going to be filled, but certainly it's giving us areas to keep a close eye on as it relates at least to the semis. Now, there was a question about why the SOX rather than the SMH. Well, the SMH is an ETF. One of the things we rely on here, 3 out of the 4 classes we offer in Trader Talk each week, is to utilize indices and the like to highlight these sectors for you. Fridays traditionally is an ETF show, but it is non-archived. So if you'd like to see us working through the market like this with use of ETFs in lieu of these indices, check us out on Fridays. That's a class that I traditionally host with James Boyd. Same bat time, same bat channel, right here at Market Open on Friday mornings. Brent, I wanted to talk about transports next, mainly because it seems like the transports, or maybe this was a group that was giving us a little bit of the heads up. We have seen a strong rally over the last 2.5, 3 weeks, even before last night's news hit. And this group, you would have thought, if things were as rough as it was relative to oil, you would have thought transports would have continued to struggle. That's not been the case.
Yeah, I mean, I guess it's partially, hey, it sold off and it's trying to be forward looking. And it's maybe people were optimistic in transports that there was, the worst is we've seen the worst of it.
Hmm.
That's my speculation. I don't know for sure, but that's I mean, we're at a yearly high on this, which is just kind of baffling to me, to be honest. But yeah, I mean, we look at transports because transports are considered to be kind of a bellwether for the economy. Because look, if you want to know how the economic engine is working, so to speak, well, our economy is dependent upon people moving things and people moving people, and that's what transports is. And
Hmm.
so, why I can't argue with what it's doing, and that's to a broader point here, Kevin. Is regardless of what your technical analysis is telling you, or regardless of what you're thinking uh, should happen, sometimes the market doesn't react exactly that way. So you need to be open to being wrong, and let the charts tell you whether you're wrong, and don't just be stuck in your mindset on that regard.
I could not agree more, Brett. It's not good for my ego, but it's helpful to
Mm.
be reminded that I'm going to be wrong from time to time, and we should plan to be wrong. So if I set my level of, hey, I think the market's going to hold here, and it doesn't, well, then what are the steps I will take when that does not hold? I need to have those ideas noted for myself. Risky, yeah, risky business pointing out that they gave us a chance to advertise the Friday ETF class. Appreciate you doing that with your question on the SMH. I'm always happy to take advantage of that. I wanted to use the airline stocks here briefly, Brent, as a reminder of what we're witnessing. Brent, that looks like a pretty good dragonfly doji at the top of a move. This is the risk we're worried about. Now, it's not to say that this is going to close like this, but it ran to the gap and then basically paused. And now we're looking to see what happens the rest of the day. We don't know how airline stocks are going to play out for the rest of the day, but this is kind of the kind of thing that can occur on a hot open like this.
So this kind of illustrates the difference between like a line chart and using candlesticks. Because look, we're up 9% today on this,
Hmm.
which is massive. And let's say assume we end up still very positive for the day, which there's probably a pretty good chance we will, no matter what the next few hours looks like. Um, it's the line chart would show a nice big move up, but if you're looking at candlesticks and you close right near the bottom of the candle for the day, you could use a bar chart for this as well. Uh, that isn't considered to be as bullish. So it's hard to say, hey, we're up 5% of the day for the day or something, and say that doesn't look bullish. But
Hmm.
if you were up 11% or something and it's come down to 5%, right now we're at 9%, then that is less of a positive indication going forward.
See, and this is exactly what we're trying to try and validate. I mean, look at this, Brent. It moved so strong, it gapped well beyond R3, right? So cleared the intra-period resistance, is trying to set a new floor. We're going to have to see where that resides. It's too early to know. I wanted to highlight just the same situation playing out in the trucking space. So there's the truckers making a nice gap move higher, and then you're going to see something similar with the rails. All three of those components of the transportation index. Notice here, this one is interesting, Brent. It's basically just held the channel dating back to last April on the rail stock. So that looks a little interesting as well.
Yeah, and just keep in mind when we talk about these, there can be individual stocks that really help to move an index. Bill pointed out very nicely in the chat that Delta had a nice earnings, and so Delta's gapped up, and that, that's, it just kind of shows how that can help move the rest of the market as well on that.
Hmm.
I mentioned earlier, we've got earnings season next week. And so keep that in mind as we go through. And as you're looking forward, we're going to have a lot of these corporate earnings that some have more impacts, some just have impacts on their industry, and some have broader impacts. So, for example, a great report from Apple or Nvidia can, probably move the market as a whole more than an individual stock. But some stocks, they can certainly affect their industry, even if they're not affecting that much more than that.
That is the truth, Brent. Let's move over to my Market Watch page. We're going to take a look at sector action to illustrate how the year-to-date change is being impacted dramatically by today's moves. So real quick, look at our leadership. We've got industrials, discretionary, and tech as our top three. Industrials have had a good year-to-date move, up 10%, but the others, discretionary and tech, even financials, have been lagging pretty well. Now they're only off 6, 4, and 7% respectively. But this is potentially the shift we've been waiting for in the broader market here, getting some leadership with some of those sectors that can be defined as more bullish for the broader markets when they are in leadership positions.
Yeah, you can see the shifting. I mean, energy up 28% year to date, but look at the past 5 days. The next column over, it's the lagger there. And today, obviously, is a big part of that. But that's how some traders look to see shifts in the market. They'll look
Hmm.
at what it's been doing for the last month or 2 months, and then they'll look at what it's been doing for the last, say, week to try and spot trends. Now, you got to be a little more careful when you start looking at just like 1 day moves. The shorter term the time frame, the more vulnerable you are to just like noise, so to speak, I guess, stuff that doesn't reflect the overall trend. But as you broaden that out, you can kind of get more of the just where the relative strength of the market is at the currently, not for
Hmm.
the day, but kind of filtering out the intraday noise there, and some traders try and use that to trade the market. And it's not a guarantee that what has been strong over the past week or two or three is going to continue, but that's an approach that some traders take on the market.
Yes, it is. And Brent, I just wanted to let every viewer know that some of this stuff that you're looking at is available to you as links. So script links or grid links are in the show notes. If you were to open up the notes beneath this presentation window with the link that says more, you're going to see a series of grids for chart breakdowns and so forth. But you're also going to find the scripts for the relative strength over 5 days, 21 days, and 63 days. So if you'd like to take advantage of those, please feel free to do so because, again, we use these just as a means of understanding what's happening in the market. If you'd like to do the same, you are welcome to do so. Just know that any of the scripts that we share, whether grids or relative strength scripts or what have you, these are not guaranteed for timing nor accuracy. We just want to let you know that they are available to you. Now, Brent, is there a sector maybe that you wanted to peek in on? I've got energy in right now. Yesterday I was talking about the potential to hold the 20-day, but how frequently when we get breakdowns, it might not be the immediate moving average that's holding up, but maybe the secondary one. And boy, we tagged the 50-day on the nose with today's open. Is this a spot maybe where if you've been late to the energy party, would a trader maybe look to expose some money to energy here?
That's it. Well, when you get pullbacks like that, this is certainly potential. Here's what I would answer, Kim.
Yeah.
From a technical standpoint, yes, that makes perfect sense. But there is always the challenge. Right now, the energy sector is so news driven that whatever the technicals say, of all the sectors out there right now, it's the one that's probably most susceptible to news. And so just take whatever you do, and this is, I guess, true for any time you trade, just be very cautious about what your allocation is, what your rules are with it, so that you're not exposing yourself to too much risk.
Hmm. Brent, you're speaking my language when you say things like that. I mean, that just makes me so excited because I just love the discussion around trade management, risk mitigation. Am I in the right number of shares for the amount of risk and time frame that I'm
Yeah.
trading? All of that is so important to us as traders. We need to have that stuff defined for ourselves so that we can, I think, trade effectively. Brent, I think it would be a mistake if we didn't at least check in on precious metals here. So I wanted to do that with the futures quote on gold. So we'll start with that again, reminding you we're not encouraging you to trade futures in any way. We're just using this as an understanding of the trend. But Brent, gold had, after having broken down, found the 200-day and has bounced into an area that some traders might call resistance.
Yeah, in fact, before today's candle, it was like perfectly going to the 20-day moving average, looking like it was just going to give us this kind of bear flag motion. Well, hey, today changed things. And so it as of now, we're a half hour or so into the trading day here, but this is a futures chart. But the point is, it is a move up past the 20-day. Maybe that bearish bounce isn't going to hold. Uh,
Hmm.
you know, we'll see on this. Potential for change here, but perhaps a little too early to call that change definitive on this. But some strength out of not just gold. We can look at silver. We can look, which is a fairly similar chart. The whole material sector, in fact, Kevin,
Yeah.
is looks pretty similar here on this. You see that it kind of
Ooh.
it was above the 20-day, but it still kind of had that kind of flaggish pattern there,
Yeah.
breaking up. So we're seeing that across, a lot of the material sector there.
I'll tell you what, this is intriguing, Brent. The move here in the materials sector through the 50-day, this is a prime example of just what we mentioned earlier, how technicals don't tell us what's coming next, but they let us know how to set our risk. Here, one day above the 50-day may not validate the uptrend being back in place on materials. But what it does tell traders is that if that line holds, if the level of the 50-day is maintained at today's close, tomorrow's close, even Friday's close, so that maybe we get three in a row over resistance, some traders would then say, all right, now if we get thrown back below the 50-day moving average on a closing basis, I have reason to move on from my trade. There are plenty of rules that traders can build around this approach. And so, as always, have a plan and then trade that plan as best you can. Brent, we had a couple of upgrades I wanted to touch on. One of them was Deere this morning. We are in our final couple of minutes, so I'm going to rattle through this. This is an interesting chart too, Brent, because you had a huge move up, followed by a appropriate pullback. And I say appropriate because my eyeballs tell me that might be a 50% retracement from the peak to the level that we've held. And yeah, kind of was, right? And now
Yeah,
you're back
yeah.
above it. They were upgraded at Jefferies to hold from underperform. Price target on this is 550, which is already cleared, but I thought that this could be a positive for an industrial position, up 4% today.
Yeah, and this just kind of shows it just depends on your perspective. I mean, this is up for the year, which is great. And the pullback occurred after just a huge, huge move up. So some profit taking probably was to be expected, but the nice upgrade can sometimes be the impetus for a change in trend. And this pullback we've had, maybe that's going to help us out here. But this is a nice little bounce on Deere.
It is. And again, as always, look for your opportunities. Somebody also mentioned this when we were talking about the materials sector, was that in addition to setting risk, just utilize those newly achieved levels as reasons to raise your stop orders, right? If you're incorporating stop orders as your main way to exit trades as they move against you, well, remember to raise those as prices go higher so that you can work to capitalize on those upward moves. You want to try and lock in the profits as best you can. Now, of course, if you're using a traditional stop order, that's going to trigger and become a market order. We can't guarantee the price on those. You have the alternative, the stop limit order, of course, but doing that doesn't guarantee execution, even though it would say if you sold, you're going to at least get your price. No order is perfect for you, unfortunately, which is why we talk so much about the process of piecing into trades, piecing out of trades, setting your risk, proper position sizing, and so forth. So, as usual, Brent, a good, lively discussion. It's great that the market has maintained these levels for us after the open. So good to have you on a Wednesday, man. Thank you for being here, sharing thoughts and insights today.
Hey, I'm glad. Thanks to everybody for joining us today, especially all you new, anyone who's new here. Invite you back each morning. And thanks for having me, Kevin.
Absolutely. Thank you for being here, Brent. And big thanks to Barb Armstrong in the chat. And I'll remind you all, we had a couple of links in the for survey opportunities there. Please take the moment to let us know what you think of the class. Your feedback is valuable. All of your comments come to me directly, Brent and me directly. So we'd love to hear from you. And a reminder once more to follow us on X individually. We're there for you each day. And anything you're looking for in the way of grids, scripts, etc., open up the more section beneath here, the notes section essentially for this class. Right beneath it, you're going to find all of those links in there, everybody. So with that, keep it tuned to the Schwab YouTube coaching channel. Much more to come from us all day on the channel today. We thank you for being here. Thank you for participating in the show. Have a great Wednesday. We look forward to seeing you again real soon.